Hi, my name is Martin Dodd from Midlands Investment Agency Financial Advisors. What I'd like to talk to you today about is how business owners can be more tax efficient. So this is my top 10 tax saving tips. But before we get into the detail, what we're talking about here is legal tax control. No tax evasion, pure legal tax control. So the number one thing that all business owners should be doing is taking their income from their businesses in the most tax efficient way possible. That's a combination of wages or salary, dividends and bonuses. The second top tax saving tip is to revisit making contributions to your pension. Pensions are still the most tax efficient way of minimising the amount of tax that you pay. And more so than ever, pensions are now one of the most efficient ways of passing on your wealth through the generations. Number 3 is to always consider using both you and your partner's ISA allowance each year. ISAs are very tax efficient because there is no capital gains tax made on any investment or profits made into an ISA. My number 4 top tax tip is to consider the timing of the disposal of assets that have capital gains. We each have an annual capital gains tax allowance, so if we organise our affairs so that we are not selling assets that go over the annual threshold, we're going to save some more tax. Tax tip number 5. Construct your family income in the most tax efficient way to make sure you're not paying collectively any more tax than you should be paying. Consider where it's appropriate to pay your partner some of the income generated for your business. Now, of course, it's very important that your partner is still fulfilling a function in this business, because otherwise that would fall foul of tax legislation. Tax tip number 6. Tax efficient borrowings. There's 2 types of borrowings in my view. There is good borrowing and bad borrowing. If we borrow money personally, it has to be paid for out of taxable income. But if we borrow money via our business, this is regarded in most cases as a tax efficient loan which will attract tax relief. So structuring your borrowings in the most tax efficient way is another way of reducing your income tax liability. Top tax tip number 7. Always consider using your inheritance tax annual allowance. We're all allowed to give away £3,000 a year tax free, and that doesn't form part of any other allowances. So you and your partner can give away £6,000 a year, and if you haven't done it in the previous tax year, you can go back 1 tax year as well. There are some other minor tax allowances of £250 to as many different people as you like, provided they are not somebody that you've already used your annual £3,000 allowance for as well. So there's plenty of scope to give a little bit more money away. Consider starting a pension for your children. Yes, that's possible. Even though your children may be minors and don't have an income, you're still permitted to invest £3,600 a year for them into a pension. Tax tips number 9 is another one of my favourites, and one that we're all guilty of. Make sure you claim all your legitimate business expenses. But that's another great way to make sure you're not paying any more tax than you need to. And finally, tax tip number 10. Make sure you're fully claiming the tax relief on your pension contributions. Pension contributions get tax relief at basic rate at source, but you're not automatically given higher rate or additional rate relief unless you claim it. So make sure you claim your higher rate and additional rate tax relief either through your self-assessment return or via your accountant. My name is Martin Dodd, financial advisor, helping people achieve real financial freedom.